In this video, we're going to tackle everybody's least favorite subject, taxes. And we'll skip all the jokes and complaints about taxes in the interest of keeping it short. Just get right to the point. So why would you set up taxes in LMN? Well, if you pay your vendors tax when you buy materials, you want to make sure that tax is calculated in your estimate as a cost so that your customer ends up paying for it and it doesn't come out of net profit. On the flip side, if you have to charge your customers sales tax when you sell them goods via an estimate or via an invoice, we have to make sure those taxes are set up as well there too, so that when we actually make the invoice for the customer, that tax will be there and ready for us to charge. Setting taxes up is really easy, so let's take a look at how to do it. You're going to find the tax section under the item catalog menu, down at the bottom, taxes. So you just click that. And you can see if you're looking at our sample database, we've already set you up with a couple of samples. One's exempt and one's just a sample sales tax. Let's start with exempt. Just about everybody is going to need an exempt tax. Even if you're in an area where you always charge tax, maybe you end up doing work for the government or a police department or something, and they're tax exempt. So it's a good idea to always have this in your database. I'm going to click it to open it. So this is what it looks like to set up an exempt tax. Our tax name is EXMT, or something that lets you know it's exempt. I've got a little description there as well. Then down here in the rate section, I've set up a rate called exempt. And because it's tax exempt, our rate is 0. So it's going to add absolutely no tax to this. So anytime I didn't pay a vendor tax when I bought a material or good, or I didn't charge a customer sales tax when I sold them or installed them something, I'm going to use my exempt tax. It's definitely something you want to have in your database. And let's look now at actually how to set up a sales tax or state tax. So you can also see in our sample, we've created a tax sample. You're probably going to want to overwrite this because it's probably useless for you. So to edit it or overwrite it, I'm just going to click it. Now the tax name is the first thing. Some companies or countries have harmonized sales tax. And so we use an abbreviation here in Canada called HST. But you may be in a state or a county that uses a county name. So maybe it would be something like Durham County Tax. What I'm going to do is first shorten that tax name to something like DUR, something nice and short. I don't want to show big, long tax names in my estimate. It wastes all kinds of space. Here in the description, I could put Durham County Tax, and that way I'd know what it was. So keep your abbreviations clear, but as short as you possibly can. Now down here in the rate section, I would put my name here as well. And then let's say Durham charges a 6.25% sales tax. Then here in the rate, I'm going to go 6.25%. Now, when I'm done with that, I simply click OK, and I've saved my tax. 90% of your taxes are done that simply. If you have other counties that you do business in, so for example, I'm going to click OK here. It's going to do the exact same thing we did with Durham. This time I'm probably going to make it from scratch though. So I'll go new, and then maybe I've got another called Wellington County Tax. So I might set up WEL. Wellington County, and Wellington down here, we'll set that name up there as well. They charge a 7.15% tax. So I'll put that here and I'll hit OK. And now I'll have those two taxes to use and play with when I'm estimating. And of course, if you deal in lots of counties, just keep adding all the counties you need in here. And you got a tax for every single one. Now there were a couple more advanced fields that I didn't talk about. So let's just tackle those now. Usually, you're not going to have to add or use these things, but you will in some special cases. So let's dive right in. Purchase credit. What a purchase credit means is if your area has a value-added tax system, it works like this. You pay your vendors a tax when you buy something, but then you submit government for a tax credit. You actually end up getting that tax back. If that's the case in your area, you're going to want to tick off purchase credit. Now, the end result, when I tick off purchase credit, what it means is the item is flagged as taxable, but it's not actually going to count that tax as a cost. So if that tax is a cost to you as a business, make sure that's not on. But if you get the tax that you pay the government on your purchases back as a rebate, then you're going to want to turn that on. What that'll mean is your item can say that it's taxable, but we won't actually build the cost of the tax into the estimate, assuming you're going to get that cost back. So any area with a value-added tax system tends to work that way. But many areas do not. So most companies, I think, will have that off. Now, the next one is piggybacked, and this one is really rare. Piggybacked is a really special and really extortionist type of scenario that looks like this. Let's say, for an example, we have a state tax and a federal tax. What happens is sometimes the state tax, or maybe it's the federal tax, charges tax on top of the other tax. So let's break it down, for example. If you're in an area where you might have a 5% state tax and an 8% federal tax, but the state tax is calculated on top of the subtotal plus the federal tax, you tick that off as piggyback. Again, this is very, very rare. Does not happen in many instances, but if your tax rate is actually composed of two taxes, and one of those two taxes is calculated on top of the first tax, so you're actually paying a tax on a tax, that's where the piggyback scenario would come in. But again, not very common in today's day and age. Most of your tax scenarios should be pretty straightforward. Simply set up the tax, an abbreviated name, and a rate, and now you'll be able to use that tax when you're estimating. Next up is you're going to want to set up your tax defaults. Once you got your tax list in here, there's a default setting up here. So you click Set Up Defaults. First step, purchasing tax. Let's set up your defaults. Now remember, all we're doing here is setting up a default tax. We know that sometimes you're going to sell work in different areas and may charge different taxes. Sometimes you're going to buy stuff in different areas and you may pay different taxes. It won't always be the same for every estimate, and that's okay. All we're doing here is setting up our default. So what you want to set up here is your most common tax scenario. We can change this on each and every estimate, no problem. So first I'm going to set up my purchasing tax defaults. If I pay a tax when I buy hardscapes, now remember we're setting up our purchasing taxes. So when I buy hardscapes, if I usually set up pay a tax, I'll set that tax here. If I don't pay tax when I buy hardscapes, I'll leave it as exempt. Same with softscapes, same with subcontracting, and same with other. So if you don't usually pay vendor taxes when you buy things from your vendors, these are all going to be exempt. If you say pay taxes on materials but not on services, I'll probably leave subcontracting and other exempt because they're more service related. And I'll set the hardscapes and softscapes to the most common tax I pay. And again, that can change on every estimate, no problem. Then we move to step 2, our sales tax. These are the taxes that you charge your customer. And again, we appreciate that this could change based on area. It could change on type of work. Some counties have really convoluted tax scenarios, which the taxes change based on all kinds of different variables. All we're doing here is setting up the defaults. Again, you'll be able to configure this on an estimate by estimate basis if you live in an area where taxes are complicated. So you're on your sales taxes now. These are taxes you're going to charge your customer. If your customer pays tax on your labor rates, you're going to want to set that as taxable. If not, you leave it as exempt. Same thing with equipment, hardscapes, softscapes, subs, and other. So if I was in an area, for example, that charges tax on materials, but everything else was tax exempt, I'd simply go here, set those up, and click Next. And the last thing is Finish. And there's one important step here. It says Update my catalog items to use this default. Really, really handy step. Let's say you already have 1,000 items in your item catalog. You don't want to go back to all those items and change the tax settings. Just tick that off and hit Finish. And what LMN will do is go look through your whole catalog and update all your current labor, equipment, materials, and subs to those sales and purchase taxes we just set up there. Makes it a lot faster. But once again, if you are in a highly variable tax scenario area where taxes change all the time, taxes will be more appropriately set on an estimate by estimate basis. We'll cover that in the estimating videos. That's all you need for setting up taxes though. Make sure you have all your areas and your rates set up your defaults, and you're good to go.